Have you ever stopped to question whether your bank is really on your side? You trust them with your hard-earned money, but what if I told you they're quietly taking more than you realize? You rely on them to safeguard your savings, handle transactions, and maybe throw you a bit of interest. But here's the harsh truth. They're siphoning off more from you than you'd expect. Today, we're going to expose the underhanded tactics banks use to quietly rob you. Subscribe now and hit the bell icon so you don't miss any of our future insights. Let's get into it. Number 1. Low interest rates on savings accounts. One of the most blatant ways banks steal from you is by offering pitiful interest rates on your savings. We've been sold the idea that a savings account is a smart way to grow your wealth. Sure, it's low risk, but don't let them fool you into thinking it's a wealth-building tool. In reality, most savings account rates don't even beat inflation. Inflation, or the rising cost of goods and services over time, means your money loses purchasing power every year. For example, if inflation is at 3%, but your savings only earn 0.5%, you're actually losing money every year. It's as if your bank is silently draining your funds. To put this into perspective, the national average interest rate for a basic savings account in the US is around 0.43% as of 2024, while inflation often hovers between 2 to 3%. This means your money's purchasing power is eroding even if the dollar amount in your account remains the same. Let's break that down even more. Say you have $10,000 in savings and inflation is 3%. In 1 year, that $10,000 will only buy you what $9,700 could today. Meanwhile, your bank has been lending that same $10,000 out to others at rates of 10% or more, raking in profits while your savings stagnate. The global banking system profited over $500 billion in interest margin in 2023 alone, money made from the difference between what they pay savers and what they charge borrowers. It's a legal con game where your trust becomes their payday. The less they pay you in interest, the more they keep for themselves. Unless you actively seek out high-interest savings accounts or alternative investments like stocks, bonds, or real estate, your money is working harder for the bank than it is for you. Number 2. Fees, and more fees. Banks thrive on fees. Maintenance fees, overdraft fees, ATM fees, wire fees, fees for paper statements. It never ends. These charges may seem small, but they add up fast, costing you hundreds or even thousands over time. Let's dive deeper into maintenance fees. Some banks charge you for the privilege of holding your own money. Doesn't that sound absurd? You're paying them to keep your cash, and some fees hit $15 a month. That's $180 a year gone, just for having an account. And if you don't meet a minimum balance, that's when they slap the fee on you, effectively penalizing you for not being wealthy enough. According to a bank rate survey, the average monthly maintenance fee is $16.36, meaning people are potentially spending nearly $200 a year just to keep their bank account open. Next, overdraft fees. This is one of the sneakiest tricks in the book. If your account dips below zero, even by accident, banks will hammer you with fees of $35 or more per transaction. Worse, banks often rearrange transactions to maximize those fees. Imagine making 3 small purchases, then a big one. But the bank processes the big one first, pushing your account into the red. After that, they charge you overdraft fees for each of the smaller transactions. It's called transaction reordering, and it's a tactic designed to maximize profits. ATM fees are another way banks nickel and dime you. Use an out-of-network ATM, and you could get hit with 2 fees, one from the ATM itself and one from your bank. These fees might seem like pocket change, $2.50 here, $3 there, but over time, they slowly chip away at your balance. Collectively, Americans paid $1.4 billion in ATM fees in 2023 alone. It's a relentless cash grab, and you're the target. Number 3. Credit cards. Credit cards may look convenient, but they're specifically designed to trap you in debt. Banks want you to carry a balance and pay those sky-high interest rates. According to the Federal Reserve, the average credit card interest rate in the US is over 20% in 2024. Let's do the math here. Say you carry a $5,000 balance at a 20% interest rate. If you only make the minimum payment each month, most of that payment goes toward interest, not your balance. It could take you years to pay off, and in the meantime, the bank is making serious money off you. In fact, they want you to pay the minimum because that's how they profit the most. Sure, reward programs sound great, cashback, travel points, but don't be fooled. These cards tend to have higher interest rates, and the rewards are bait to push you into spending more. For every dollar you earn in points, the bank has likely made many times that amount from the interest you pay on your balance. In fact, research shows that the average household carrying credit card debt will pay over $1,200 in interest per year. Number 4. Predatory loans. Banks are masters of preying on people in tough financial spots. Predatory loans, think payday loans and high-interest personal loans, target those with bad credit or who are desperate for cash. These loans often carry interest rates as high as 300%. Once you're in, getting out feels impossible. The danger of these loans isn't just in the high rates, it's in how they're structured to trap you. The terms are designed so that the loan is nearly impossible to pay off. You end up rolling it over again and again, each time paying more in fees and interest. It's a vicious cycle, and it's all designed to keep you hooked. Banks might not offer payday loans directly, but they work closely with lenders that do. When they push high-interest loans or credit cards to those with bad credit, it's the same predatory playbook in action. The goal is to keep you in debt for their gain. Number 5. Mortgages and home loans. Buying a home is a dream for many, but banks make it an expensive one. Mortgages come with hidden fees and tricky terms designed to extract every penny they can. Take adjustable rate mortgages, better known as ARMs, for example. They start off with a low rate, luring buyers in, but once the rate adjusts, often skyrocketing, monthly payments can become unmanageable. Many homeowners end up unable to keep up, putting them at risk of foreclosure. In fact, 9% of homeowners with ARMs face serious financial difficulties in 2023 due to ballooning rates. Then there's the practice of banks selling your mortgage to third parties. You start the process with your bank, but before you know it, your mortgage has been sold to a new lender with entirely different terms. Suddenly, the rules change, and you're left struggling to adapt to a situation you never agreed to. Number 6. Investment products. Banks love to push investment products like mutual funds and retirement accounts. But make no mistake, they're making big money off you in fees. Those management fees might seem small, around 1% annually, but over time they carve into your returns. Let's put that into perspective. Over 30 years, paying just 1% in fees could end up costing you hundreds of thousands of dollars in lost returns. That's money that could have stayed in your pocket, but instead, it's padding the bank's bottom line. In fact, studies show that management fees can cost you up to 30% of your potential retirement savings over your lifetime. Number 7. Currency exchange and international transfers. If you've ever exchanged money or sent funds abroad, you've probably been fleeced with foreign transaction fees or terrible exchange rates. Banks charge steep fees for converting currency and often mark up the exchange rates so you lose even more. Wire transfers are another goldmine for banks. Fees to send the money, fees for the recipient to get it. It's a classic case of double dipping, where both banks take their cut from your transaction. In 2023, Americans paid an average of $15 to $45 per international wire transfer and up to 5% in currency exchange fees, a substantial cost for people who need to move money globally. Number 8. Insurance and extended warranties. Banks also love selling overpriced insurance products and extended warranties, claiming these protect you from the unexpected. In reality, most of these products are barely used, allowing banks to pocket your premiums without ever paying out. Instead of throwing money at overpriced protection plans, you're often better off saving for emergencies. The bank knows this, but they keep pushing because these products are incredibly lucrative for them. The more you know about these tactics, the more power you have to protect yourself. Banks are experts at using small hidden fees and financial products to profit off your money, but being aware of their strategies is the first step in fighting back. Keep a close eye on your accounts, minimize fees where possible, and always look for better alternatives. If you've noticed any other sneaky ways banks are profiting off us, drop them in the comments, and don't forget to like and subscribe for more.